low interest rates really increased asset values. And now we're going to a more normal, higher rate environment. I know everyone's hoping for interest rates to come back down, but if you look the last 60 years, really the last decade was just an aberration. Does it mean, housing prices are going to languish? No. If you look at the 1970s, home prices doubled between 70 and 79.
You mentioned interest rates, and most realtors, real estate investors understand the impact of interest rates on their carrying costs. Can you speak to the impact interest rates have on raising capital?
Raising capital in a higher interest rate environment, it all is based on the difference between the return you're providing and what the risk-free return was. Today, I think you can get a GIC here in Vancouver around 5.3 to 5.5%. Now, with real estate development, we have an advantage. A 5% GIC for someone who's in the highest tax bracket of 3%, they're going to net out 2.5%. In real estate development, commonly smaller developers like us, we target, 16 to 20% return. On the high range at 20%, investors earn a capital gain. So they'd be earning 15% versus 2.5% for risk-free on a net basis. It's 6 times what they can get, and that's worth taking risk for.
Why multiplexes?
Affordability in Vancouver is huge. We got to think about how do we create affordable homes for people, yet still meeting that community need and feel. The beauty of what's happened in Vancouver with the bylaw changes is it's allowing us as developers to be able to do that without having to go through really long rezoning or development processes. With the bylaw changes, we're able to do that quite quickly and then ultimately go through that build.
How would you advise a home seller on tackling this challenge of now previously having a residential value, now being available for multiplex? How can they navigate that process?
It's important for sellers to understand how developers value property. There is a myth that developers just have big pockets and they're ready to gamble and they're going to come forward. Any sophisticated developer is going to have a very calculated model that they use for valuing properties. Going to figure out, okay, what's our projected revenue based on what we can build? What are the costs associated with that? And what's our, carrying costs? What's the profit margin or the minimum profit margin that our lender is going to require for the construction financing? And whatever's left over, that land residual is the value that they can pay for the land. There's going to be more due diligence required than just a standard residential purchase. That's for the multiplex. And once you go a little bit larger into land assemblies, because most of the development sites in Vancouver here are urban infill and require land assemblies, then property owners need to understand how they can and should be working with their neighbors and the type of contracts and agreements that will need to be in place in order for a successful assembly to take place.
Welcome to Laidler Academy. This week, our host Bill Laidler sits down with the team at Lightwell Developments. We welcome James Livingstone, Randy Cheng, and Jonathan Ames to our podcast to share their insights from a real estate investment, development, and sales perspective. A multiplex and townhome developer in Vancouver, Lightwell Developments shares what it takes to be successful when capturing the opportunity in an evolving market, especially now that multiplex zoning has been unanimously approved by the city.
Hello, I'm James Livingstone, one of 3 partners at Lightwell Developments. Lightwell Developments focuses on multiplex development currently in the city of Vancouver. My background was a CPA, partner in an accounting firm, then private equity, and now real estate development.
My name is Randy Cheng. I've been in the construction industry for nearly 18, 19 years now, started from the ground up, running through projects and working with clients through the development phases and design and engineering side of things, and then ultimately moved into commercial tenant improvement type work, and then moving into real estate and residential development.
I'm Jonathan Ames. I've been in development for about 10 years. Most of that decade, I was working for a local multifamily developer here in Vancouver, running their acquisitions team, land assemblies, mostly wood frame multifamily. And for the last few years, I've been a broker focusing heavily on real estate development land sales. In Lightwell, what we're doing is we're building these multiplex sites. I'm running the acquisitions and also overseeing sales and marketing.
Great. Well, thank you for being here. James, how did Lightwell come together?
Yeah, it was a bit fortuitous. I was initially in 2022 looking at investing in U.S. real estate with interest interest rates rising, valuations down, they're dropped, and volumes came off. So I was looking at what I could do here in Vancouver, and I attended a multifamily conference, and I realized we have a massive housing problem, not just in Vancouver, but in much of Canada. And in business, you want to be able to solve problems. So I really like the idea of building a development company to solve that problem. The only problem is I didn't have any construction background, and I knew enough from investing in construction companies in the past that you need to have a deep experience in construction and development. So I began just meeting people, and the first person I met was Randy. After speaking with almost 24 different builders and smaller developers, and we hit it off, and we each thought the same way. And then we met Jonathan as well. So it was really just three people looking for opportunity, and we found each other, and we've been working together now for about 6 months, and we launched Lightwell 2 months ago. And that's because the multiplex bylaws just came into force in Vancouver a month ago. So this is a brand new opportunity, and so we have a brand new company to take advantage of that.
It's exciting. It's great to see you have all three different backgrounds coming together. Randy, why multiplexes?
The reason for multiplexes, affordability in Vancouver is huge, right? It's an expensive market, and I think housing is one of those things that people need to. We got to think about how do we create affordable homes for people, yet still meeting that community need and feel. So the beauty of what's happened in Vancouver with the bylaw changes is it's allowing us as developers to be able to do that without having to go through really long rezoning or development processes. With the bylaw changes, we're able to do that quite quickly in comparison to traditional, let's say, townhouse development sites that could take years to get rezoning and development plans and then ultimately go through that build.
Excellent. And Jonathan, being a broker myself, I understand the challenges with finding opportunities that are profitable. Can you walk us through what's your process when you start exploring Vancouver, and how are you going to select which neighborhoods to focus on?
On the acquisitions side, it's very important for brokers to always be thinking with their sales hat on. Meaning when we buy a site now and then we're anticipating selling it in a few years, or if there's a pre-sale program, it might be a little bit before that, we have to think, what's the end user going to be thinking when they come to check out our property? And they're probably going to be coming on a buyer's tour, and they're going to be checking out 15, 20 other properties at the time. So how is our property going to be stacking up in comparison to the other available opportunities on the market? And what's our value add going to be? The process of identifying the neighborhoods to go after, you kind of want to be able to see where the opportunities are going to be going, where are the trends, where do people want to be living, what's important to them. And you also want to be looking at where does the city want things to be going. So that would involve looking at, say, the Vancouver plan that recently came through and checking out the various neighborhood plans and that policy and checking out what the city wants to be building is sort of a guiding light on where you want to go.
Good insight. So if you're a home seller, how would you advise a home seller on tackling this challenge of now previously having a residential value, now being available for multiplex? How can they navigate that process?
Yeah, so it's important for sellers to understand how developers value properties. And I think that is something that a lot of lay people don't understand. There is a myth that developers just have big pockets and they're ready to gamble and they're going to come forward. There have been a few developers that have acted like that in the past, and for the most part, they go out of business eventually. Any sophisticated developer is going to have a very calculated model that they use for valuing properties. Going to figure out, okay, what's our projected revenue based on what we can build? What are the costs associated with that? And what's our, carrying costs? What's the profit margin or the minimum profit margin that our lender is going to require for the construction financing? And whatever's left over, that land residual, is the value that they can pay for the land. It's also important for property owners to understand not just the pricing that a developer would pay, but also the terms that a developer will require. So usually there's going to be more due diligence required than just a standard residential purchase. And because interest rates are so high right now, most developers are requiring considerably longer completion dates in order to tackle some of the risk associated with the carrying costs from the high interest rate environments. And those are all things that property owners need to understand. That's for for the multiplex. And once you go a little bit larger into land assemblies, because most of the development sites in Vancouver here are urban infill and require land assemblies, then property owners need to understand how they can and should be working with their neighbors and the type of contracts and agreements that will need to be in place in order for a successful assembly to take place.
Thank you for that insight. And it's important for sellers to understand this. Now, James, how do you take what Jonathan just said about longer feasibility times, potentially longer closings, and still find sites when you're competing against investors or end users who are going to move into the homes themselves?
So that's a good question. There's a couple of issues that I think people have to be aware of. So the first is that the city fees are quite substantial. So part of City of Vancouver's objective was to limit land speculation. So as an example, we have a project in Shaughnessy that we're just developing, and the city fees, the extra city fees, are $450,000. So normally that $450,000 would show up in increased property value. In this case, the city's taking it. So I think that's a major issue that affects us all. In terms of, end user, it's all about affordability per neighborhood. So in a case like Shaughnessy, where a lot of the homes are large, $8, $9, $10 million homes, we can produce homes just under 2 million. Are they 8,000 square feet? No, they're 1,400, 1,600 square feet.
I see one of the opportunities and the challenges with these multiplex zoning is how we're going to compete, or how developers are going to compete on the open market with such a wide variety of properties to be available for sale. So thanks for that answer. Randy, before we get into some of the questions we sent you ahead of time, how do you navigate how high of spec to build within your projects and the luxury finishes compared to medium level finishes and how that relates to price points?
So I think when we look at the spec level that we're going to be building to, we got to number one, look at the market that we're building in or the neighborhood that we're going to be building in. Certain neighborhoods, like whether you're going to build on the west side or east side, those buyers are going to look for different elements or features in the home. Ultimately, there's always a baseline building requirement to the structure of the homes that we're going to be building, right? Whether it's meeting energy codes or local bylaws that are required. And I think what we do is when we're looking at designing a home, you have to put it together in a way that has a design or high-end feel for those areas. If you take Shaughnessy, for example, if we're building there, you want to make sure that the home is cohesive in terms of the design so that everything matches. So when you walk in, you get that really put together feel. And then those buyers will be looking for whether it's high-end appliance brands or certain types of fixtures that are in bathrooms and kitchens and whatnot. Those are those things that will be a little bit subjective to each neighborhood that you build in. But I think there is going to be a certain level of detail and design aesthetic that we are going to be putting into homes that we build that are not just builder grade, but you got to build in that a little bit premium market, in our opinion, so that you stand out from everything else that's out there in the marketplace. Or else we'll just be put into the same commodity box as everyone else.
Good. So for the end users out there, Lightwell will be the higher end spec, the quality builders in this marketplace. James, have you decided or have you put thought to whether you'll pre-sell these multiplexes or are you going to sell them when they're move-in ready?
Yeah, multiplex is new. The city's accepting submissions in December. So there's still a few things that we don't know really about the process. Right now, we have 3 projects on our docket, if you will. So once we get more experience, then we can increase the number of developments that we build. So in the short term, we don't plan to pre-sell because I think it's difficult at this stage for home buyers to know exactly what a 6-unit development is going to look like. There are some examples from character renovation where there'll be 6 unit. As we develop more units, however, we would pre-sell just to manage risk. If we build, as an example, 50 units, we don't want to take the spec risk on 50. Whereas here, taking risk on 12 to 18, we're comfortable with that.
Good. Excellent. We're excited to see those projects come to market. For Jonathan, what are some of the most common mistakes you see in the development industry?
Some of the most common mistakes that I see in the development industry are things like taking on too many projects at once or taking on too much leverage during the early zoning and permitting process. And that can also be quite risky if there are some delays in the project, or just being too optimistic in general on timelines and not pushing projects along. So in our business, time is money. Overpaying in general is a huge mistake that developers make, especially when there's low inventory and there is froth in the land market. It's hard to get sites at those times, so people will do anything just to get another development site, and that has tremendous risks associated with that. Not having enough contingency in their budgets, just in general, not running a tight ship, not being careful with cost mitigation and cost escalation. Sometimes there's unrealistic projections for revenue and not listening to what the market wants and values. And instead, some developers build for what they might like, but they're not building for what the market wants. And that is a problem. So a developer might value a certain feature themselves, but if the market can't absorb it or doesn't want to pay for that, then you're really hurting yourself. A developer has to put themselves in the end user's shoes at all times, from acquisition all the way through design, building, and marketing.
One of the common mistakes that you mentioned was not pushing the project forward. What's an example of a developer not pushing a project forward, and how can they find the accountability within their own company to ensure that they're doing what they need to do to maintain their timelines?
Well, in general, things need to be done in a timely manner, in a business-like manner. And when you're dealing with a lot of people, like in development, you're juggling a lot of different teams and a lot of people, whether it's your in-house team or it's external contractors and subtrades, then just having clear, consistent communication, having clear goals and tasks that for people to accomplish, and making sure that they're being done and giving clear directions those are all key elements in order to pushing any project along in any industry, really.
So having the timelines and the goals set out. And how do we work with our consultants or with your consultants who are all overloaded, or they seem to be overloaded with a number of projects on their desk? How can you get your projects prioritized by the consultants?
Good question for Randy. Or do you want me to answer it?
You throw it over to Randy if you like.
Yeah, I can answer that. I think, when you look at development and project management, construction management, it's all about people, right? And we're dealing with multiple stakeholders and consultants and city jurisdictions and all those types of things. And I think the quicker that we can build better relationships with the people that we're working with and getting them aligned with the project goals and our expectations, that's how we keep top of mind with the vendors that we're working with. Because ultimately, projects are at different scales for various different clients. And let's say you take an architect, for example, a small project may be something that is not like it's not important, but it does take a different level of priority if it may be a smaller value or larger value. So ultimately, it's about making sure that people that we're working with understand the expectations that we're upholding. And then also, like Jonathan was saying, in our internal team, is to make sure that we're staying top of mind, that checking in 24 to 48 hours. Hey, where's this deadline that we're expecting? Because if we don't voice that and we don't put that accountability upon ourselves, vendors and trades or consultants that are working, you kind of get pushed a little bit down the line. So it's important for all of us to be putting that pressure on and move things forward.
You get what you ask for. The person who's pushing forward will get what they want.
100%. Yeah.
Good. Excellent. Randy, to follow up on that, what are some unusual things that people don't necessarily know about construction?
There's a lot of strange and weird things that we deal with in construction. I think one thing that on the development standpoint, there's something called air rights. I think most people don't know that you can buy quote unquote airspace. And so if you were building, let's say a six or 7 or 10 story tower, for example, and there's an adjacent property that isn't really being developed, there are instances where developers can buy that airspace where it limits the height of an adjacent building being potentially built in the future, which who knew you can buy air, right? So that's something that's strange.
What you're saying is you can buy the space above your neighbor, and then the city, they would let you add that to the height of your potential building? Is that how?
Potentially, yeah, giving you the rights to build taller or higher, which is something that most people wouldn't comprehend that that's even a thing, right?
Wanted to pursue that. How do you get started? What would be the first way to understand whether you could buy somebody else's air rights?
And what we would need to do is we need to go see what the urban plan of the city or the jurisdiction would be. And then ultimately it would have to deal with what is being proposed on those adjacent developments, if any at all. So it would start through the city process.
Interesting. Go to the city and ask.
Yeah. Another thing that is, we deal with that is quite common is if you're building developments is, the upgrade of services is a huge thing. As we're looking at building these multiplexes and densifying things, sewer upgrades, hydro upgrades, all of those things are going to be a point of contention. And if we are looking at potentially bringing services through, whether it's neighboring properties or easements and what those types of considerations, you potentially could get into a lot of pushback. And there's this, people kind of put it, it's like, it's not in my backyard. So if we're going through potentially someone's property, or we're going to have to damage, streets and sidewalks and whatnot, all of that needs to be taken into consideration. And ultimately something as a developer, we would have to pay to put back. So when you're looking at development, a lot of these improvements that are happening when we're building are placed on the onus of the developer to do. And it's part of that negotiation with the city. So if you want to build this, the city's saying, well, you got to upgrade sidewalks or street lamps, or we need a new hydro connection here. Those types of considerations are part and parcel of the development process with us.
I can see that being a major challenge in valuing property without knowing what off-site infrastructure improvements may be required. How much time will it take to quantify those upgrades? And are you able to do that before you commit to your land price?
Part of any development, we're looking at due diligence, right? So, if you take civil works as an example, we would need to engage our civil consultants to review what the existing infrastructure is. And there are metrics that can identify what that potentially could be. It ultimately is still a rough estimate from a, certified civil professional, let's say. One of the other things that we developers should keep in mind, we've learned this before, is you have to be able to have the funds to potentially do it twice. Now, what I mean by that is, let's say there was a service upgrade that costs $100,000, for example, whether we're upgrading sewers or hydro, street works and whatnot. The cities require deposits for that value to be placed in trust with the city, so that in case we as developers don't do it, the city has those funds to move forward. Like Jonathan was saying before, it's about making sure we understand our performance, the dollar values that are in there, and that should be taken into consideration, because 100,000 is not a small amount of money, but it could be in the millions at times when the services are really far away, right? So that's something to keep in mind.
Thank you for sharing. That's especially important for newer developers to understand. James, what's the most interesting fact that you've learned in the last decade?
Oh, there's a few actually. So one, up until the pandemic, I never really did any planning on black swan events, but 1 in 100-year event, and it really impacted us. So now when I'm looking at risk, I'm assuming things like that can happen. But also a couple other interesting things, really just the rise of technology and how it's impacting us. That's really come into its own. I remember when like Amazon was just selling used books, 1997, and now it's this juggernaut. And of course, I think a big story the last decade post 2008 is just low interest rates really increased asset values, and now we're going to a more normal higher rate environment. I know everyone's hoping for interest rates to come back down, but you look the last 60 years, really the last decade was just an aberration. Does it mean housing prices are going to languish? No. If you look at the 1970s, home prices doubled between 70 and 79. Stock market languished, it declined, but home prices increased. And that's just due to employees demand wage increases. We're seeing that with the unions today. So if rates stay where they are and the cost of living makes it tougher, then employees demand wage increases. And just demographically, the last decade, we've seen a huge shift where baby boomers, who are now 58 to 77, they're retiring very quickly. In Canada, they account for 25% of our population, the majority of the net worth. And Gen Z, who really would be replacing them, are a third less in numbers, which accounts for why we're having all this immigration in Canada now. Last year there were more deaths than birth in BC. So if we didn't have immigration, we'd be going backward.
Interesting.
Yeah.
You mentioned interest rates, and most realtors, real estate investors understand the impact of interest rates on their carrying costs. Can you speak to the impact interest rates have on raising capital?
Raising capital in a higher interest rate environment, it all is based on the difference between the return you're providing and what the risk-free return was. So risk-free return 4 years ago or in 2020, it was practically zero. So any return looked pretty good. Today, I think you can get a GIC here in Vancouver around 5.3 to 5.5%, which I don't remember the last time it was that high. So as a risk-free return, that's pretty good. Inflation is still higher than 2%, of course. So any return you provide side has to be better. Now with real estate development, we have an advantage. So let's just use 5% just for easy math. A 5% GIC for someone who's in the highest tax bracket of 3%, they're going to net out 2.5%. In real estate development, commonly smaller developers like us, we target, a 16 to 20% return. So on the high range at 20%, investors earn a capital gain. So they'd be earning 15% versus 2.5% for risk-free on a net basis. So it's 6 times what they can get, and that's worth taking risk for. So what we're finding on capital raising, it's actually going quite well because, what do you invest in? I think a lot of investors are tired of the volatility of the stock market, and it's 7 stocks that really dominate, the market, say in the US. If you pull those out of the S&P 500, the other stocks are either flat or down. So it's really, just a few stocks driving the stock market. And then of course, and I won't pick on, well, I guess I will pick on pre-sale condos. The problem with pre-sale condos is that you rely on real estate markets to go up in value. So if you buy a condo today, you're betting that 3-4 years from now, when the market is when it's complete, that the value is higher. And that's because you're buying after the developer has already marked everything up. They've marked up the land, they've marked up, the actual, with the construction costs. Sometimes you get a discount, but often you don't. So in our case, investors are getting our cost. We don't mark up the land, and they're participating in the value add of development. So the result is we don't need real estate to go up at all, and we can deliver a 16 to 20% return. Because of that, quite attractive. And if real estate values do go up, then you get a much higher return.
Great insight. Thank you. Randy, what is something people do not understand?
That I think all developers and construction people have deep pockets. I think it's a very challenging industry, challenging business, because we're faced with lots of different things that are going against us. I would say that, when you look at construction, project management, those types of things, we're always working uphill. So it's about managing risk. It's about making sure that we're asking the right questions, involving the right professionals in advance so that we can do our due diligence and mitigate risk. So that's something that I think is really important. Yes, we are building property and improving, kind of urban neighborhoods and whatnot. But ultimately, it's about how we navigate and to build the best teams to make sure that everyone is aligned in that goal, working towards something that we're trying to achieve, right?
I can see that likely across all developers, the land prices are going to be fairly similar. Construction costs are going to be fairly similar. So the differentiating factor between developers is on the execution side. Would you agree?
Yeah, there's always multiple ways to do something, right? So we have to think creatively. Jonathan mentioned that earlier about having good terms or people that can negotiate really well upfront on the land acquisition side. That really helps mitigate costs and initial capital outlay, for example. When it comes to getting things through the city, those types of relationships that we have, and like we said, being kind of buttoned down in terms of our proposals or our applications, or those types of things really do help. And then ultimately having that experience and knowledge on the execution side. When you have experienced people, ultimately everyone who works within those projects, they make better money. Because as a new developer, if you're inexperienced and you don't know how to build something, or you don't know how to manage or coordinate effectively, people who are working on those projects will ultimately lose money at the expense of your inexperience. Well, that's why they look for reputation, credibility, right? So when you have those types of things going for you, people will work harder for you, knowing that we're experienced, we have ethics and integrity in the way that we conduct business. All of those things will ultimately be the why something succeeds.
I can speak from experience. At 27 years old, I tried to do my own development project with no experience. And not only was it painful for me, but it was painful for all the consultants around me navigating that process. So I appreciate the experience and how important that is. James, what's something you've recently learned that surprised you?
Well, I read a lot about financial markets, and U.S. debt impacts Canada in a big way. And currently it's around 33 trillion. Well, the bulk of that debt is actually owned by U.S. government agencies and domestically. Only about 7 trillion is held offshore. So it's I found that interesting, because the government's just trading its own debt. So eventually that's not sustainable.
How do you see that impacting Vancouver?
The U.S. is a different market. So as an example, they have 30-year mortgages in the United States. So currently a mortgage now is about 8%, whereas most homeowners refinance during 2020, 21. So they're sitting at around 3, and that's fixed for 30 years. So rates can go up, but it's not really impacting disposable income. Now, does it impact home sales? Sure, volumes are down just because 8% mortgages are expensive, and so people just shelter in place. They have a nice home, they have a mortgage, but it's not impacting disposable income. So what we're continuing to see is healthy GDP numbers. As I mentioned with boomers, what are they doing? They're spending money, they're retiring, they have money, they don't have debt. So higher interest rates generally aren't impacting their spending habits either. So what happens when you start spending more and more money and spending savings is it puts pressure on interest rates. In addition, with U.S. monetary policy of continuously running deficits of well over $1 trillion a year, during 2020 it was $4.5 trillion. That puts further pressure on interest rates to go up. Meanwhile, us here in Canada, if we don't match interest rate increases, what happens to us? Our dollar falls. So with a lower Canadian dollar, suddenly imports are much more expensive. It negatively impacts our economy. So Canada, in a way, even though our mortgages are 5 years, and we have from what I've read, 1 million mortgages coming due in 2024, which are going to reset from 2 to 3% to say 6.5 to 7. So if the United States continuously raises interest rates, we're going to have to follow suit. So that's something people aren't so happy
Interesting
about.
fact to take away from this conversation. There's going to be 1 million mortgages in Canada that are going to have to adjust from 2 to 3% to 6, 7, or 8%.
Yeah.
Thank you for sharing. Jonathan, what's a fundamental human desire that people are looking for?
Fundamental human desire that people are looking for, a major one, is community and belonging. Density creates a better feeling of community. People want to live in a place that's safe, secure, and people want to be proud to call it their home. And we find that it's a huge responsibility building something for people to live in, and it's something that we take very seriously. And in Western culture, in individualistic society, as opposed to a collectivist society, this individualistic nature of our culture here, it often fosters loneliness and isolation. And it's something that we really try and address in the communities that we build. So people want to feel like they belong. My family and I, we live in an amazing project here. It's actually one that I helped build when I was working at my old company. It's community, and it feels like a family. We need more space right now, but one of the hardest things about leaving our current home is feeling like we're abandoning the community that we've helped build here and that we're a part of. So we want all of our projects that we build at Lightwell to have elements that recreate that feeling.
I resonate with that completely. Living in a condo for a good portion of my life, thinking about the cul-de-sac on a single family home and how the neighbors would come together, that same energy happens in multifamily. And sometimes you can have more connection with your neighbors when you are in a multifamily development. Thank you. James, back to you.
Right.
Close us off with one of the secrets to yours and Lightwell's success.
I've had many partnerships, invested in many types of businesses, and I've had great success, and I've had a couple failures as well. And it all centers around people. The quality of the people, it's the alignment to the people. And so with Lightwell, with Randy, Jonathan, and I, it's really, I think all three of us, we're really looking at the people. It's not just about, hey, here's an opportunity to develop, but as a team, do we share similar values? Do we want to go in the same direction? And do we have the character? We've all been tested. Probably, Randy's been tested a lot with construction projects, but Jonathan as well. He's probably been disappointed more than a few times when the deals fall apart, and certainly with me too. So it's really about the partnership and the people involved.
Great. Well, 2 questions for our listeners. Number 1, can they invest with you? And number 2, if the agents have properties with development potential, can they connect with you to work through purchase opportunities?
On the investment side, we work with accredited investors, and people can go online to see what that definition is, but generally it's incomes of $200,000 or household income of $300,000 or net financial assets of $1 million, less their home. The good news for investors is we don't take all the capital up front because there's a long permit expectation of somewhere between 8 and 12 months. So we take half the commitment at the point of subscription, construction, and then we call the other half once we get close to permits.
So is that open investment? If somebody wanted to reach out to you and was an accredited investor, is that an opportunity that is available?
Absolutely. Yeah, we're just raising our first fund, and we should have that closed off in the next couple of months. So there's a good opportunity to invest now, and we can show the properties we have too. So it's not completely blind. We can show the exact developments we're working on.
Perfect. Well, we'll put James's contact details on the screen so you can reach out to James directly. And Jonathan, for the realtors and homeowners out there, what is your acquisition process? Will you work with them? And how do you see being able to move forward best?
Absolutely. We'll look at every opportunity that comes our way. And if it isn't a fit, we'll give you an answer very soon and we'll explain why. So we always provide feedback as well. We have great relationships throughout the realtor community. You have an opportunity, you can send it to me. And if you're a homeowner as well, we'd love to take a look at your opportunity. We could submit an offer. We're also open to partnering with homeowners if they want to get involved in the project as well. Maybe leave a little bit of money in there. That's something that we could look at as well. So we're open to creative solutions.
Why don't you just take another moment to outline that opportunity for a homeowner? How can they roll their equity into a project with you? What would that look like?
As James mentioned earlier, we have our own equity and we also have investor equity. The simplest structure would be for a property owner to leave a certain amount of equity in the project and just they can come in as an investor in the project as well. And it gives them an opportunity to participate in some of the upside that we would be getting, and we could share the profits with the property owner in that manner.
That's an excellent opportunity for homeowners. So for any homeowners out there, reach out to Jonathan as well. James, thank you. Randy, do you have any last words to close us off today?
Well, I appreciate everyone's time, and development can be very exhausting process, but ultimately I think it's great to see from something that is raw to be able to build a beautiful structure, community, and improve that environment around us. I think that's great. At the same time, being able to provide investment returns for clients and seeing all of that come to fruition is quite rewarding for all of us and everyone else involved.
Thank you for being here. We wish you the best. We'll be watching your success and looking for your projects, and we'll look forward to speaking to you next time.
Thank you.
Thank you very much.
Thanks for tuning in to another insightful episode of the Laidler Academy podcast. We hope you find today's discussion informative and inspiring. Here at Laidler Academy, we're committed to helping you unlock your potential and transform your life, providing the insights you need to succeed in real estate. If you have any specific topics or questions you'd like us to cover in future episodes, feel free to reach out to us through social media or email info@laidleracademy.com. Thanks again, and see you on the next episode of the Laidler Academy podcast.